Well, SoFi has been slipping and sliding its way all the way down to the lowest price since the beginning of November. Should you be worried? Well, I'm going to explain to you guys what you should do in this video and whether or not you should worry about SoFi's drop and what is expected in the future. Don't worry about subscribing, tapping the like button, or looking for the coaching and Discord link. We'll get to that very soon. Let's dive right into SoFi right now. However, before we do that, today is my free masterclass webinar. In just a few hours, I'll be hosting my webinar, 8 p.m. Eastern Time, 5 p.m. Pacific. The registration link is in the information box below. It's absolutely free. Every student that's ever attended my webinar says they learn more in the hour with me than they do anywhere else. I have a massive announcement during this webinar. You don't want to miss it. And I'll be hosting a Q&A to answer all of your questions and hang out with you and show you how to learn to become a profitable trader in 2025. I look forward to seeing you at my webinar. SoFi was recently downgraded to $8 from KBW. Now, I don't really understand this because it's kind of blown out of proportion. SoFi is definitely worth more than $8, especially considering future guidance and expectations. Not necessarily thinking that SoFi's price target reflects its value today at $16 or even $15, but surely if the company is going to live up to these expectations in the near and broader term future, the price is definitely worth more than $8. I'm not really sure where KBW is getting their analysis on the stock and the reason they've come up with this rating. Although they did compare it to the composite NASDAQ, I still don't feel that SoFi's price is worth anything less than $12. I think right now the $11 to $12 range is about as low as SoFi should go as far as its value, especially considering future baked in guidance and expectations. SoFi Technologies fell 6% on Thursday after KBW downgraded its stock on concerns over the fintech firm's lofty valuation and ambiguous financial targets. Shares of SoFi Technologies fell 6% on Thursday after KBW downgraded its stock on concerns over the fintech firm's lofty valuation and ambitious financial targets, further cooling a month-long rally. Analysts at the brokerage firm rated the stock as underperform and established a price target of $8, nearly half of SoFi's current price. The move reflects the challenges and higher expectations startups such as SoFi, a digital banking and brokerage app that offers loans, credit cards, and investing services, faces as they transition into a mature financial service provider. A strong economy, lower interest rates, and the company's success driving better scale and profitability justifies shifting our investment thesis towards a more long-term view of what mature SoFi looks like, the brokerage said. The stock's valuation has become overstretched across a wide matrix of multiples. Earnings per share forecast for 2026 and the company's long-term target for a 20 to 30% return on a tangible common equity ROTCE will be tough to achieve, the brokerage added. Shares were last trading at $14.53 and are headed towards a fourth consecutive session of losses. If current levels hold, as of last close, they had nearly doubled since October. The company's trades at 69 times expected earnings for 2025, while the median for consumer digital lenders is 12.2 according to KBW. Now, I don't entirely agree with this analysis on SoFi. In fact, I really don't agree with it at all. But there is a possibility that SoFi could slide back into the gap fill around $13.50. And if it breaks the $13 mark, it definitely has a very solid chance that it could drop down into the mid-10s, where it will find its next support level. I don't believe this is because of disbelief in SoFi itself, but rather the fact that the stock market is sliding pretty drastically over the last couple of days and correcting and going into the new year. Historically, January is not a great month. So I don't feel that SoFi is completely to blame for this price drop. I just don't. I feel like the price drop is not even just the analysis that KBW gave or the rating that KBW gave to SoFi. I feel that 30 to 50% of the drop is also to blame on the market itself and the market conditions and the overall economy and the time of the year, January, and the tax loss harvesting and all of this stuff happening at the same time. Because of the bullish sentiment of the market, Inauguration Day on its way, and a much better hope for economy moving forward, it is likely that SoFi will find a very strong and lengthy support in the $13 to $14 range over the next month or two, and with good earnings on the next next upcoming earnings report could potentially push it back into the $14, $15, or even $16 range. There are definitely possibilities the stock could go lower than that, but if that was the case, it would be an opportunity to get SoFi even cheaper, especially if you missed out on this recent move starting at the beginning of November. I've said this before and I'll say it again. The market cap of SoFi is $15.3 billion, and when we look at the trailing 12-month financials, it's $3.63 billion, which gives SoFi a price to sales of just over 4, which is incredible considering Tesla's is 10 times higher than that, almost like 8 times higher. Apple's is like 4 times higher than that. It's like 11 and change for Apple. This is a very, very good price to sales, and they're profitable, and they're an actual bank, not just a fintech. When we look at the chart, we can see there's a lot of support in the gap, which is right around 13 to 1350. It's rejected it twice. Now, Palantir and other stocks, many along the course of the last 5 years that I have directly traded. And as you guys can see, this is the gap fill area over here from 13 to 1358, and it's rejected it twice. Palantir, as many other stocks, have rejected such gap fills and never fell below again. There's a very good chance SoFi drops and keeps rejecting, and it stays in the $13.50 to $14 range, which is likely until we get another earnings or 2 earnings reports, and maybe into February, March, April, the stock starts coming back up, and this could likely happen sooner. Right now, the market conditions are not there for really any stock, let alone SoFi. And it's fairly risky that SoFi could break to this gap, and if it does, it will indeed, almost for sure and undoubtedly, fall back down to around 1150, where there's a minor gap fill right here, and if it fills that, it could fall all the way down to this support of 965. I don't believe SoFi is going to fall down to this support, and I don't even really think it's going to fall down to the 1050 support. I think what's likely in the worst case scenario is that it could pull all the way down, fill this gap, and find a lot of support in the $10.50 to $11 range, and right around here is where it can consolidate. Now, before earnings, this is kind of unlikely because no one really wants to sell their shares, let's say at $13.50 or $14 a stock continues to drop, and then earnings, it runs and they try to get back in and lose money, or maybe they sell it now and then it runs again in lieu of earnings. So this is definitely not something anybody wants to happen. So it's got a very solid chance that the stock will just consolidate up and down in this $14 range between $13.50 and $14.50, like right in here, until earnings time. And if earnings beats the estimate and their guidance is good, then the stock will likely, at worst case, just keep consolidating. As long as they don't miss earnings and as long as guidance is good and they beat decently. So right now they have an EPS of 4 cents. If they get 5, 6, 7, it's going to be great. If their guidance is good, that'll also help it, and the stock will do fairly well. I don't think it'll drop much. I want to show you guys a strategy that can help offset some of the losses as well as get into SoFi, because now is the time to do it. If you currently own SoFi, it's fairly safe, in my opinion, to start selling $15.50 or $15 covered calls, going 1 week at a time if you need to get back some of that premium to make up for some of these losses. If you've been waiting for SoFi, waiting for another pullback down to the 13 range to be safe, making sure there's enough support at 14 before you get in is a very good and very smart move. If you want to start making money on SoFi and you'd like to take advantage of the lower price, you could wait for the stock to see if it drops any further, and if it does, wait for more stability and then go $1 or $2 below and sell puts. Right now, if we find a lot of stability in the 14 range, you can go below the gap, which is very safe, and sell $13 puts going a week out or 2 weeks out. This will be safe premium, and if the stock drops below 13, like say like this, you now get assigned, you have the stock at 13, you could sell more puts down here, and as the stock consolidates and comes back up for earnings, you have these shares that are now in the profit, and now this was free premium on the short put contract. This is what I would do on SoFi right now. There's also a very decent possibility, like probably 60%, I would think, at least better than 50-50, that if you were to sell a 13.50 put, you would be pretty safe off with that scenario week or 2 weeks out as well. If the things I'm talking about in this video are confusing you, and if you're just starting out in the stock market and you're trying to retire and maybe you're having a hard time, maybe this is all very confusing, or maybe you've been trading for a while and you just don't get it and you're having trouble, I would love to help you. Helping others achieve their financial goals is what drives me every single day. I grew up a Catholic. My mom was very hard on me about doing the right thing and trying to be a good person and help others when I could. And when I created my success after having a really, really bad divorce and going through a pandemic, I told myself I wanted to achieve success. And when I did that, I told myself I wanted to help others, which is exactly what I've set out to do. So if you guys would like to turn your $8,000 portfolio into 40 grand or your $30,000 portfolio into 100 grand in as little as 5 or 6 months, like my other students are doing, then I would love to give you the opportunity to do such a thing. If you don't believe me, you can see all my students' profits on the screen. And let's take a listen to what my students Josh and Adam had to say.
For anyone who's thinking about joining, is anyone can do this. It's just really like putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really, really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly can't thank Corey enough.
So I started with 15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
So you heard my students Josh and Adam had to say. This could be your success story too. All you have to do is go to investwithcorey.com, click on training. You can watch this video, which gives you more insight into what I offer, because there's no time to do all of that right now. And then you'll be able to book a call with my team and I, so I can help you achieve all of your financial dreams and goals. I offer one-on-one coaching, full training course, and a Discord with hundreds of people just like you. And I look forward to helping you on your financial journey. Let's go, fam. SoFi is a really strong stock. And in my opinion, it is a long-term hold, 1, 2, 3-year hold. And right now, the price is low enough to justify getting in, because it's even juicier at $14 than if you were to get in at $16. And if it drops, you should dollar cost average and add to your position. As long as you're willing to filter out the noise and all of the static and the volatility and the underperform, overperform, and all these analyst ratings and earnings calls over the next 6 months to a year or 2 years, and you're willing to be patient, dollar cost average, add to your position, and hold SoFi, I in no doubt believe that this company will deliver, as Anthony Noto has previously said verbatim, that it's not a matter of if, but a matter of when SoFi becomes the biggest bank or one of the biggest banks in the United States. And that being said, SoFi right now is at a much more affordable cost as of late, and this really just signifies a great opportunity to grab the stock at a pretty decent discount. And if the stock drops again over the next couple of weeks or month, it'll just be the opportunity to add more to your position. And this will give you the opportunity to create a nice position size in the stock. So in the near and long-term future, when the stock runs, you will have more profits. Like I said, filter out the short-term noise to give yourself long-time stability and security. Don't forget, guys, my free masterclass webinar is today in just a few hours, 8 p.m. Eastern Time, 5 p.m. Pacific. Link is in the information box below. Very limited spots remain. Every time I host a webinar, students say the same thing, that they learned more in the hour they spent with me than anywhere else. But a lot of students can't get into the webinar because we book up and fill the spots completely, and there's no room left. Don't let that happen to you this time. Register now for free. I'll be hosting a Q&A, and I have a huge announcement during the webinar, so I will see you there. Thanks so much for being here, guys. I will catch you on the next one.